Will Metro PCS put T-Mobile on hold for Sprint? Let's talk to John Marino, editor of our Reuters PE Hub. Okay, this news coming out of Bloomberg today that Sprint is mulling a bid for Metro PCS over Deutsche Telekom's bid, of course.
Yep, no, it's kind of a big mix-up now at the bottom of the smaller end of the phone carrying pool. Some of the smaller players are now looking to merge up. It seems like if Sprint manages to, I guess, shoehorn themselves into this, they're going to have to absorb $250 or more of a breakup fee.
Okay.
That's big news for them.
That's big news for them. Okay, Metro PCS stock was down 8% when the market opened now. It's recovered some of its losses, down 3%. Sprint down 3% as well. Let's talk about Leap, because Leap, as the sole competition to Metro PCS, it fell and it continues to fall today.
They're a smaller player in the pool. They're actually much smaller. They may not even be worth really buying for Sprint. However, there's just so few companies out there that they could potentially acquire. One of the other factors is obviously if Sprint loses or tries to get involved and fails to make its play for Metro PCS, they themselves could be a target.
Okay, the story heating up, though. Interesting. We'll keep an eye on it. And we will come back to you in just a minute, but I'm going to talk to Jerome Martis, who is our Director of Consumer Research. Hello. We're going to talk some retail sales. Solid, not stellar, coming out of the back-to-school season. Let's go through the winners first. Stage Stores, Gap, TJ Maxx, and Zumiez.
Well, teenagers went back to school, they eyed what their classmates were wearing, and then hit the malls to buy the latest fashion items, and that's why apparel did so well. Gap, for example, received a strong boost from its Old Navy division, which posted an impressive 10%. Old Navy tends to be its strongest performer during the back-to-school season.
Interesting. All right, going through the losers, Wet Seal, Cato, Fred's, and Kohl's.
Well, Cato and other retailers blamed Hurricane Isaac, but the other three, those are a big miss when it comes to fashion items.
Interesting. Okay, but one big surprise, Ross.
Yes, Ross increased their third quarter earnings guidance based on stronger than expected August and September same-store sales. But the retailer already warned that October same-store sales will be slightly lower at 3 to 4%, which suggests that consumer spending will slow down in October.
Okay, and September, a weak September, second worst month of this year, and really much worse than last September.
Exactly. Retailers were facing very difficult comparisons from last year. Last year, back-to-school sales were extraordinary, over 5%.
Wow.
So they had very difficult comparisons.
All right, give us a preview, though, as we head into the holiday season.
Well, analysts have become bearish on the holiday season. They've been lowering their estimates for the fourth quarter. Same-store sales have gone down from 1.7 to 1.5, and this is weaker than last year's 2.9%. And in general, you know, the sentiment seems to be that consumers are very worried about the economy, especially because it's an election year and there's a lot of uncertainty in the air.
All right, so you might not get coal in your stocking, but you might not get exactly what you're hoping for.
Right.
All right, Jerome, thank you so much. We're going to take a look at U.S. stocks now and see what they're doing. We've got some green arrows across the board here coming after Mario Draghi's comments, in which he talks about the ECB getting ready for some bond buying, and of course the drumbeat leading up to a Spanish bailout. Financials leading the market. We've got green arrows all across the board there, with it looks like Bank of America up the most at just under 3%. All right, I'm going to move to the hot spot and rejoin Mr. Marino here. And let's talk about Informatica, because they're down 28% again, the software maker, citing poor business in Europe.
It seems like the data space is continually getting invaded by smaller players. Informatica is one of those that's feeling the pain. They were down 22% to lead the day off, down 28 now, as you said. They cited overall customer demand increased, which could be something that shareholders want to hang in for.
Right, exactly. Okay, but they're dragging down their peers, actually, because as a bellwether, their software is used alongside the software of many other big companies, including Teradata, Click Technologies, Citrix Systems, all down today. But things are looking up for the Zuck, because Facebook crossed the threshold of 1 billion active users per month.
Yep, no, it's kind of like the famous scene in the Social Network movie where they crossed the 1 million user line and everyone gathered around their little in-house monitor. This is really just a cosmetic number. They were going to hit 1 billion sooner or later. They're going to keep going up, obviously, user-wise. It's going to be interesting to see when their big competitor, Twitter, hits that number. One of the biggest factors for them, really, I think, is going to be the potential of the shareholder lockup expiration coming in November. Right. The stock's probably going to go back down again despite their pop in September.
Well, what's interesting, too, is that as they continue to look for ways to make money off of Facebook, yesterday they announced that as a user, you can pay a fee to have your posts more visible and more prominent. Buy your own popularity.
Maybe I need to be that cool.
No, I think I need to friend you, though. I don't think we're friends. All right, we'll do that after the show. Moving on to Hewlett-Packard. Yesterday, shares went to a 9-year low. Meg Whitman addressed the shareholders in San Francisco, and today they're down another 3%.
In the era of the PC, HP really used to be the king. They printed nothing but money. Now Meg Whitman's printing nothing but excuses. She blamed executive turnover for what she called, I believe, significant executional miscues. Translated, it means they're probably not going to be seeing a bump back up in stock price. One thing that can help them in the future is all of their IP technology. They were once upon a time a tablet developer, so was RIM. There's a lot of IP that can get sold right now.
All right, interesting. And just the price target cuts across the board. UBS, Stern Agee, BMO, Evercore, everybody cutting their price targets.
Another disappointment.
Notice. All right. John Marino, thank you so much. And remember to check us out on Twitter at Reuters Insider and look at our YouTube channel. That is Reuters.com/Reuters TV. I'm Lisa Bernhardt. This is Reuters.